Good morning, everyone. This is Mike Minter, and it's your Market in Minutes report. We are looking back on January the 15th through the 19th. We're now 3 weeks into January, and it's been an interesting start to the year. Hope you guys are staying high and dry. We're having some pretty nasty weather today in the Houston area, so it's raining cats and dogs, as they say. So hope you guys are staying safe. All right, let's jump right into it here. Let's look at what occurred last week. So we have our 5-day performance first. We had a bit of a mixed week in terms of, each category and region, but overall, a very, very strong week. As you can see, the Dow Jones, the S&P, and the Nasdaq all firmly in positive territory, especially the Nasdaq. We'll talk more about that. Definitely a tech-led rally. However, small caps continued to struggle a bit this year after a tremendous run in the fourth quarter. We've talked about that. Foreign stocks also had a tremendous run up in the fourth quarter, and so we're seeing a bit of a pullback here. Although it hasn't been all bad this year for foreign stocks. They've had their moment in the sun as well. But let's take a look now at the year-to-date numbers, and as you can see, as small caps have continued to struggle. They're down a bit, as well as foreign. But the U.S. broad market is up very nicely at 1.54. The Nasdaq is now up over 2% on the year, and the Dow Jones up about 0.5%. So still firmly in that positive territory overall for the U.S. markets, which is nice to see. Let's take a look at rates. Had a little bit of a climb from last week. We'll talk a little bit more about that as well. But the 30-year is now at 4.3, 10-year at 4.13, the 2-year at 4.4, and a 30-year mortgage climbed a bit to 7.17. So it had a little bit of a bump there as well. Nothing dramatic, but did see rates across the board increase. So let's talk a little bit about the stock market. So we did have a little bit of a dip, excuse me, and then we did rally, of course. So stock prices dropped early in the week before rising to new highs as the weekend. And the week began with Q4 bank earnings, which did somewhat disappoint. The news pushed the financial sector and the broader S&P index lower on Tuesday. The yield on the 10-year Treasury climbed after a Fed governor said the central bank may adjust rates as much as markets expect. That and stronger than expected holiday retail sales report put pressure on stocks. Retail sales were actually pretty hot, and I think that's what that does is increase the economic expectation, which again kind of puts a little bit of pressure on the Fed in terms of their rate perceived cutbacks this year, cuts if you will. So we'll see how that all plays out. But tech stocks drove the Thursday rally with the S&P and the Nasdaq recouping their 2024 losses, which was great. The stocks continued their tech-led climb on Friday with the S&P rising to all-time high, its first record close in over 2 years. So we are now back at those all-time highs. And the Nasdaq also gained 1.7%, capping a very strong week for tech in general and just the broad market. So we're in the midst of a pretty nice little rally here. So hopefully we can keep the momentum going on that as we head into the latter part of January. Navigating the middle. So sentiment seesawed last week as investors tried to anticipate the Fed's next move. Full of economic news suggested continued resilience in the economy, which may add complexity to the Fed's decision. This is what we were talking about, where, kind of good news in the economy can kind of be bad for the market right now, because that means the Fed may not be able to take their foot off the gas as soon as people hoped in terms of rate cuts. But we shall see. December retail sales came in very strong, 0.6 for the month, besting the expectations of 0.4. November and December combined to depict a robust holiday shopping season. So actually much better than expected, which all in all should be a good thing, but it does, it's having that counter effect on the market right now. Unemployment dipped unexpectedly for the second week of January. A sign of a more resilient labor market again. Not great news for the Fed. So that news and hotter than expected housing starts pushed the yield on the 10-year to 4.14. It's its highest level in a month. So that's what we were talking about when we looked at the rates on the first slide. So all in all, still in very good shape. It's just this economy is amazingly resilient. And I think what we're looking for is just a little bit of a cool down or a tapering off, just so the Fed can say, okay, we've done our job, and now we can, start to see those rates come down, which is still very, very possible. But this economy just keeps on rocking. So what's on deck for this week? We have our key economic data over here on the left. So Tuesday we have U.S. 2-year note auction. I'll be watching that. It'd be interesting to see the demand there for the U.S. Treasuries. Wednesday, PMI composite petroleum status report. Thursday, we have GDP, gross domestic product, which will be interesting. Advanced estimate of Q4 in year 2023. So durable goods orders, jobless claims, and housing starts. Friday, personal income and outlays. And we are in full swing earnings here, so you can see a ton going on. Monday, United Airlines. Tuesday, Microsoft, Johnson & Johnson, Procter & Gamble, Netflix, Verizon. You got some behemoths in here reporting on Tuesday. Wednesday, again, Tesla, big one. Abbott, International Business Machines, AT&T. Thursday, we have Visa, Intel, T-Mobile, Marsh, Northrop. And Friday, we are rounding out with American Express, Colgate, Palmolive Company. So a lot going on this week, big earnings. There will be a lot more news. And of course, as always, we will report back to you next week on what occurred. In the meantime, please reach out to us with any questions or concerns, whether you are a client or just want to learn more about us. We'd be honored to speak with you. And hit that subscribe button down below if you like this kind of content, any type of investing or financial planning, markets, advice type content is what we try to put out on a regular basis. So, check us out and subscribe if you like it. But other than that, guys, I will talk to you next week. Thanks for tuning in.